Well, welcome to this panel about the green side of real estate. My name is Ivan Feit. I'm principal at Axon Partners Group. We are a consulting and investment investment firm headquartered here in Spain. And I'm in charge of the growth investments, but much more important than myself, we are here to share some impressions with a very interesting team of panelists. So maybe Carlos, Talia, Miguel, you can introduce yourselves a little bit.
Sure. You want to start?
Yeah, I can start. So I'm Miguel Nigorra, partner and head of Europe for Fitwel. For those of you that don't know Fitwel, we are the largest venture capital fund dedicated to real estate technology and innovation. We have two strategies. The main one is real estate tech. The second one is climate tech. First one looks at marketplaces, software, tech-enabled models that touch the real estate industry with a broad definition. The second one is trying to decarbonize the real estate world. What makes Fitwel interesting, and I guess why I'm here today, is because we have as LPs some of the largest owners, operators, developers, brokers of real estate. So a lot of the REITs, a lot of the public companies, like Prologis, Hines, Merlin Properties, Colonial, CBRE are investors in our fund.
I'm Talia Raffaelli. I'm a partner with Compass. Compass is a 135 million euro VC based in Amsterdam, Berlin, Copenhagen, and Tel Aviv. We invest in three main areas. One of them is the built environment. Another one is climate tech. The third is things in Industry 5.0, but a lot of in the convergence of sustainability within the built environment and advanced industries. Happy to be here. Thank you.
And I'm Carlos Gomez. I'm the co-founder and CEO of Vivla, which is one of the key players of the fractional homeownership category here in Europe, which is a new but exploding category of, we're trying to redefine second home ownership, and we can talk more about it now.
Great. So, well, maybe also it makes sense that we get a chance to know who is our audience today. So, just for curiosity, can you raise your hands if you are entrepreneurs? Great. And do we have also investors here? And corporates? Well, I think we have a little bit of everything, but that's great, especially if we will have a Q&A at the end. But maybe, well, my first question to you, that you are next to me, your view as entrepreneur of such an interesting company as Vivla is, how are you facing sustainability in your company? I mean, you are only listing properties that are sustainable and carbon neutral, and do you think that your customers give you importance to sustainability when they are entering into the platform? Mm-hmm. What's your view on all this?
Yeah. So the beauty of our model is that it's built from the ground up around sustainability on real estate. So pretty much just to give you a brief explanation of what Vivla does, what fractional home ownership means is we take second homes, which normally are used around 15% of the time. So this could be your average home in Ibiza or in Marbella or in a ski resort in Baqueira, anywhere. So these homes sit empty 85 to 90% of the time. What we do is to try to fill them up with more people, and we do that by dividing the ownership and the usage across up to 8 people. So fractional ownership means you can become the owner of a home, of a second home, just for 1/8 of the cost and of the price, and you can use the home for 1/8 of the time. That could be around 6 weeks a year. So when I say it's built around sustainability, our whole core is about bringing people to use the home every week of the year. So that means these homes are full of people, full of life, bringing impact into the local economy. So sustainability here means if you have a massive asset like second homes, which is one of the biggest assets in Europe, we're talking about more than 5 trillion euros in terms of asset value, and you have just 10% of usage, bringing people to these homes means you don't need to build more homes because you can use more the homes that already exist. That means rental prices don't need to go up because you have more people using the same homes, and that means bringing more local impact on revenue and tax on the local economy because you have people going to the places not just in July and August, but every single month of the year. So it's from the very basic definition of fractional ownership, it's sustainable, right? So considering that, we also look after sustainability of tourism, of travel. So we get people to travel every month of the year, not just 2 months. And I think another view of sustainability that I love is human sustainability, right? It's like helping people live better, live more flexibly, having the option to live as a local in your home wherever you want. That's also important to have people live a more sustainable life. And with that said, we have a commitment. I mean, we're just started. We just raised our pre-seed round a few months ago, and we're just going through the first operations. But we have a commitment to only partner with local providers that are sustainable, to bring sustainable materials into our homes, and actually dedicate part of the revenue we make from our customers to non-for-profit projects locally, so we can help build a better model, better tourism model in Formentera, Ibiza, Marbella, anywhere we go.
Thank you very much, Carlos. I totally agree, that at the end, your model is sustainable from the very fundamental. No? And maybe a question for the investors representing here the VC funds. I will say that many of us will think that the real estate sector, it's not really environmental friendly, or the traditional real estate sector, no? Do you think that funds such as yours that are investing into real estate and PropTech startups are bringing this sustainability to the sector? And especially in your case, also, Miguel, the fact that you have many of these real estate companies as investors in your fund. What's your view on this?
So you're right about that real estate is one of the biggest contributors to real estate. In fact, if you take into account real estate and construction together, they account for around 30% of the total energy consumption in the world and about 40% of the total emissions of carbon. So everyone, when you think about climate tech, when you think about climate change, everyone thinks about transportation, heavy industries. The real elephant in the room is real estate and construction. 40% is coming from that. So we think, or we saw this as obviously the largest challenge that our society has to address, specifically a huge industry like real estate, which is 13% of the GDP. It's something that is not going to be addressable easily because there's multiple problems. First one is, in a way, who pays for it, right? So, and we can dig deeper later into the amount of money that needs to come into decarbonizing real estate, but it's a huge investment. Two is, a lot of the real estate is actually not commercial real estate, so it's not owned by a company, it's owned by all of us. So it is somewhat hard to figure out models on how to do it at scale. And the third problem is that real estate has been built for ages, right? In some cases, centuries. So it is easy on new builds, on new models to decarbonize, but the biggest problem is not the new builds. The new problem is, what do you do with the 95% of the places we live, work, live that need to be decarbonized? If anything, I must say that real estate has been lagging investment into technology, anything that looks like IT, innovation, digital, for a really long time. We had to evangelize our LPs about what PropTech meant for a long time, and it took them an average of maybe 2 years to join our fund. With climate tech, they are on the leading edge, comparing where the industry is as a whole, and there's a really big commitment to change this situation, right? We have over 110 LPs into this fund, and it's a topic that we discuss every single day with a lot of groups, right? For those of them that are not convinced or don't think this is real or don't want to spend the money or time, regulation will come and will make them realize that even if you don't care, you need to care, or they're going to lose a lot of money. So the way we see climate tech, it's obviously as the biggest challenge that an entire industry has faced in a generation, but at the same time, at the biggest opportunity to create a lot of value, and anyone that is doing well will definitely have a differentiation opportunity with climate tech versus their peers, right?
Mm-hmm. I'm not sure, Talia, if you want to add something to the question, or?
I mean, from the perspective of the investors, we take signals from the market, right? We want to place our money in innovation, early stage innovation, where we know it's going to be mainstream in the next 5 to 7 years. And so what we're looking for is to get signals from the large adopters of these technologies, which are the real estate players, who are driven by A, regulation, and B, consumer demand. So this awareness now that the built environment is such a huge contributor to climate change and global warming. That's really what's driving all of this change. And so we are getting the signals that these technologies are becoming more relevant. That's where we come in, and our role is to be the ones who are funding these companies so that in 5 to 7 year time they are viable and can make the impact that they need to make.
Okay, both of you invest globally around the globe, no, in Europe, the US, and so on. Do you think that each country or each market has like a different, they give a different level of importance to sustainability when thinking about real estate, and maybe also your impression there, since you have begun in Spain, but I'm sure that you will be also opening new markets in the future. Do you think there is a difference between different markets? Of course, if we think about China, it's completely opposite. Maybe they don't realize so much about how important sustainability is, but within the typical markets where you are present, what's your impression?
So we operate in North America and Europe, so we don't operate in Asia. We have LPs from Asia, but we don't operate there. I would say probably if there's one category on technology overall, and you guys, I'm sure you've attended a lot of conferences, if there's one where Europe is not lagging behind the US a few years, let's say on average 3 to 5, it's probably sustainability, right? And it's a consequence of sustainability being a global problem, right? It's not necessarily, it doesn't start in a single place or finish in a single place. There's no like pools of specific capital that are coming into only one region. There's obviously that side, but then the other thing is that Europe has a long history of focusing on sustainability, but overall, not only the E of ESG, but also the S and the G, way longer than North America has done, right? The other thing is that deregulation here is also very forward-thinking, right? So I think it is probably the only one category, and in fact, it's the only one category where we've raised a global fund from the beginning, from scratch, and where Europe is as important, if not even more important, than the US, right? A lot of the great corporates also doing stuff out there, a lot of the petrochemical companies, a lot of the utilities, energy, are leaders in their sectors from Europe in, when it comes to modernizing these industries and making more climate friendly. So.
I think from a sector-specific angle, there are a bit, the differentiation between what technologies are mostly being funded and adopted in the US versus Europe. All in all, we are also active in both continents. There is a lot of activity and a lot of money going into this direction. For example, in energy grid decentralization, most of the investments have taken place so far in the US. While what we see a lot of activity in Europe is around thermal management, heating and cooling technologies, heat pumps, solar. And so it really depends on which markets you look at. But technically, there is movement in both markets. It really depends. If you look in sector-specific, there are some differentiations.
Yeah, I would say with regards to Vivla, we are getting a lot of demand from the Nordics, mainly Norway and Sweden. And these markets are just amazing. Like the love they have for the environment and nature, so they actually demand things that others don't demand, like obviously energy efficiency of the homes. There are questions like other, Spanish or French or British don't ask normally. Things like, can you help me get an electric car? Or actually something that is very funny, like them not being from here, they actually have a special love for promoting local development in rural areas. So I think we have a lot to learn from the Nordic countries. I think they are probably more than 5 years away from us in terms of adopting green stuff in general.
And in your opinion, what's fostering much more sustainability and green side in the real estate industry? Is it the materials, like new materials, or is it the construction methods? Is it, for example, like more efficient distribution, such as Vivla is doing? What do you think will foster much more this revolution?
And if I can start, I think, and I've done other PropTech stuff before in the past, I feel like sometimes we get very nerdy, very technical about super amazing innovations, but I'm not trying to promote what we do. Is sometimes it's very basic to make things more sustainable without having to invent something super amazing. So I think that and the energy efficiency of the homes. Those are two things where we have the technology already.
Yeah.
It's more about making them happen. And in terms of fractional ownership and stuff like that, it's just so easy to make things more sustainable without having to reinvent materials, because sometimes for the developer, you gotta be very empathetic. Like, it's very hard to make the return on your investment. Sometimes the materials are fine for some luxury homes, but for the average home, it's not so easy to make the return. So I think, like, without going super crazy on innovations, you can make things more sustainable.
I remember that, co-ownership was something that in Spain was very common in the 90s. So at the end, you're using technology to do something that was already tried in the past. And I think because of not having technology at that moment, it wasn't so easy. But what's your view on this, investing in different companies and so on?
So I think it's a question of, like, we said a few of the things already, I guess, right? Regulation, consumer demand, like, no company now is going to be able to achieve their targets, whatever those targets are, if the real estate is not carbon neutral. So more and more large corporation, tenants using buildings, all of us using spaces are going to ask that those spaces are sustainable, the same way that with COVID, we realized that we had to care about these spaces being safe also, right? Yeah. And then there's also a question of technology is evolving way faster than in any other sector. But all of that is great. The main reason, I think, in my view is, and we did a calculation coming out of COP26 about what is the total amount of money that needs to be deployed in the real estate industry globally to get to the targets that have been set for 2050. The number is 18 trillion. Oh. To put that into perspective, the entire US economy is 21 trillion. So it's about a US economy deployed from 2020 all the way to 2050, so over 30 years, to decarbonize real estate. If you ask me, are we going to get there? That's a different story. We can discuss that later. But in any case, with 18 trillion of money, there's a lot of opportunity. So the reason all of us investors that, and don't get me wrong, but we are not impact investors, we're like for-profit investors, yeah. We're looking at climate tech, is because there's a huge opportunity, right? If you can, and there's a big confusion, by the way, like Elon Musk is confused, so I'm sure that all of us are somewhat confused. There's a big difference between ESG and doing well with making money with climate tech. Those are two separate things. They can tie together in impact investing. But the main reason, in my view, is that there is a huge market opportunity. And and there's a lot of people interested at the startup level, the corporate level, to create new technologies, to differentiate themselves, generate alpha, and the investor level to make money while supporting some of these founders and companies.
You can also look at it from a segment perspective. I mean, you have drivers like new construction methods and materials, which is technically combined in the prefab space. Yeah. Right. So you have prefab manufacturing with more sustainable materials, which is driven by less waste and reduced costs. And then let's say if you shift to, and that's mostly focused on the new build. If you focused on Europe, 85 to 90% of the buildings that will be in existence in 2050 are already in existence. So you don't have a lot of room for new construction. You need to focus on the existing building stock, right? And so most of the focus in innovation needs to be on renovation and retrofitting. And so there is a ton of opportunity to turn these buildings into much more, energy efficient, with sustainable materials, focusing on heat and cooling and insulation. And so there's tons of opportunity in every corner. Mm-hmm.
Well, you have mentioned some numbers, and during the past months, especially weeks, we are seeing how the public markets, especially in the tech sector, are suffering a little bit, and valuations and prices are coming down, and many investors are worried about the situation and begin to tell to their portfolio companies, well, the winter is coming, you need to be cautious because maybe fundraising in the coming months or quarters will become a little bit more complicated, especially for those companies that are really cash intensive, that need to raise huge amounts of money and so on. And I will say that especially what I see here in Spain and the south of Europe, some of the companies that have raised bigger rounds have been from the prop tech and real estate sector. So also based on the fact that at the end you need to buy you need to acquire an asset, before selling it to to the final customer. But do you think that's going to be a challenge for every startup, and especially startups that are in this sector? The fact that maybe during the coming years it's going to be a little bit more difficult to fundraise? If you think that it's going to be more difficult, that maybe you think that that's not the situation, but...
Look, inflation at 9% or 10% is not good for anyone, right? It's the worst thing for an economy, it's inflation. So it's going to impact everyone. Having said that, if you focus just on climate tech, I think we're probably at the early stages of a bubble, right? I just give you one data point, which is us. It took us 9 months to raise a first-time fund, 1.5 billion, not having done much deals on climate tech to date. That clearly shows that there is a big opportunity, but also that there's some sense of inflation, right? That will all of that capital will translate at some point to the startups, right? We will be more cautious. We will be looking for extended run rates. We will be looking for better economics. But climate tech, by definition, has two types of technologies, right? One that require capital to scale. So they're built at a price that to date are not viable by the average company or individual, like Tesla or electric cars for a long time. But then at some point with capital, you take them to that level, or businesses that are at the lab, right? At a very early stage of innovation creation. There's a lot of materials that will be building the homes 20 years from now that haven't yet been created, right? So this is a bit of a niche counter-cyclical market, I would say. Obviously, everyone will need to adjust and everyone will need to find ways of navigate the storm. But if anything, you're in the safest boat, right? If you are investing in climate tech, so.
I mean, anybody who's been in the business for more than the last 12, 13 years, because we've had a non-stop growth market for the past 12, 13 years, has been aware of cycles. There was a cycle in 2000, there was a cycle in 2008, and in both instances, after months, years, things resuscitated, and we experienced what we experienced in 2020 and 2021. The last few years have been unsustainable in terms of everything that has been going on in the investment market. And so the valuations have been inflated. And so if you ask many investors today, they'll say there's a correction into what should be the fundamental numbers.
And I think it could be positive, no, at the end.
Could be positive at the end, but at the end of the day, when you're looking from an investment perspective, you want to be able to understand the fundamentals of a company. You don't want to go like this and just base the valuations on what, another large fund, is determining. So you can call it a healthy correction, which technically it is what it is. You can't maintain an up market for
In any case, I will say that both you and also myself, we are on the easy side of the table because we are investing. But what's the view of an entrepreneur? Maybe you are worried about the next financing round, maybe, and so on? Or?
And we're lucky we just raised our round, and it was very generous. So luckily, we are on the good side of things. But I'm actually very, very optimistic about the situation because I think, as Talia said, it was very crazy. The last few years were just crazy, especially in PropTech. I feel like when you talk to old school real estate people, they were like, but this can be so valuable. Like businesses like WeWork and many others. Like in the end, real estate, even PropTech, there's a lot about real estate. And I think the speed, the valuations were just too crazy. And it was pushing every entrepreneur to go crazy too fast, even before there's product market fit. I feel like I'm confident that our category is going to be here for the long term. In 10 years' time, there's going to be a massive amount of money in the game. And it's better to have companies like us focusing on profitability and sustainability and going at the right pace and evangelizing the market without pushing them into something that they don't even understand. So I think the market correction, if it happens, in the end, there's going to be money for the good companies. And hopefully, this makes us all more profitable or more sensitive about valuations and profitability.
At the end of the day, we build a lot of science and thesis and benchmarks, and we try to predict with a crystal ball what's going to happen. At the end of the day, you are investing in people, right, to some extent. So if you think you have found the right team with a somewhat right idea, they will figure it out, right? That's our view. Great talent is still going to be out there. Investors willing to back great talent are still going to be out there. Look, if you're smart, if you think you have a good idea, you'll figure it out. Sometimes maybe not the first time. So there's a lot of really good entrepreneurs that fail the first time. But we're investing in people, right? So look, trying to predict the cycles, I don't think it makes any sense, right? You need to be an investor through the cycle, and then you need to be an investor, or go back to basics, right? What is venture capital? Venture capital is risky by definition, and you are investing in people with an idea that it's somewhat developed depending on the stage you are investing in, right? So going back to basics and investing through the cycle, I think are the two advices I will give to anyone that is starting investing these days, right? Or raising a fund.
And I think as an entrepreneur, like, it's giving us a little bit more control of our reality. I think like when things were going super good,
Yeah.
Investing or like fundraising cycles were supposed to be something that you have to accept. And now I feel like if things goes lower, you get to control your reality a little bit better, which I think in the end it's always good. If the entrepreneur has a little bit more power, it gets better, I believe.
And you can't stop the pace of innovation, especially in this area, right?
Yeah.
We have so many milestones to reach, starting with carbon caps in 2023, emissions reporting in 2024, net zero in 2030. I mean, the amount of innovation that's going to have to be adopted to be able to meet these goals is going to be crazy. And so we don't see a reason to put brakes on anything.
Okay, I'm afraid that we're not going to have much time to do a Q&A from the audience, but well, I'm sure that maybe if you want to have any question directly to them afterwards or after the talk, you can find them. But just for the last 40 seconds, so like 10 seconds each, if you can maybe do a very brief wrap-up or, a sentence to finalize, or if it's possible.
If you want to start a company, this is probably the best place to be right now.
And we're extremely bullish on this market. A lot of opportunity, a lot of money out there, a lot of funds raised in 2021. So don't be afraid to go and fundraise now.
There's a lot of innovation in real estate, and it's a very, very cool category. So go for it. It's a good time.